What's up everyone, welcome to Stockton. It's a pleasure to meet all of you. On this channel, we talk about stocks before they start blowing up, say goodbye to chasing stocks at all-time highs, and say hello to making some money. So if this sounds like something you want to take advantage of, then hit that beautiful subscribe button and like the video. Now let's get to it. Before we get into the video, I have to say that I'm not a financial advisor. Anything I say is just my opinion and is for entertainment purposes only. Having said that, if I'm talking about a company, I'll let you know whether I'm personally going to invest in it or not towards the end of the video. But you should always do your own due diligence, so with that out of the way, let's get started.
Hello everyone, today I want to talk about a really exciting investment opportunity in Precision BioSciences, ticker symbol DTIL. Before I reveal what this company actually does, I want to talk a little about the time when I made a video about BNGO when it was trading at around 70 cents. The reason why I thought BNGO was a good investment back then was because of the technology they had, their future prospects, and how undervalued I felt the stock was when compared to its competitors. So when I came across Precision BioSciences, I soon realized that the company not only ticks all of those checkboxes, but in addition to that, it competes in a space that has a much larger total addressable market when compared to genome sequencing companies like BNGO or PacBio. We have a lot to cover in this video, but before we get into it, if you like what you're hearing so far, consider giving the video a thumbs up and subscribe to the channel. So now let's start off with what Precision BioSciences actually does. Precision BioSciences is a genome editing company. They utilize their proprietary ARCUS editing platform to eliminate cancers, cure genetic diseases, and create safer, more productive food sources. So now that we know what industry they operate in, let's take a quick look at their share price. As you can see here, this is a small cap company with a market cap of just 635 million. It's currently trading at around the $11 mark, but when you look at the 1-year chart, you can see a steady increase in share price over time, which is always a good sign. So clearly it's not right to compare a small cap company early in its growth stage like Precision BioSciences to its peers like CRISPR or Editas, but it's good to take a look at these companies to see the potential growth that Precision BioSciences can have over time if their gene editing platform takes off. Now CRISPR is the leader in the genome editing space with a market cap of 14 billion, followed by Editas with a market cap of 4.7 billion. This should give you an idea of how big the total addressable market is for genome editing generally. Companies like BNGO are only concerned with the detection of structural variants that are responsible for genetic diseases, whereas companies like Precision BioSciences treat and cure genetic diseases by removing the structural variants detected by gene sequencing companies, which is why they have a higher total addressable market. The genome editing market is growing at a rapid pace, and the famous Cathy Wood thinks that genome editing stocks will replace FAANG stocks in the future. So now that you know the potential for genome editing companies, I want to share some exciting news that came out recently about Precision BioSciences, which increases my conviction and confidence in their ARCUS gene editing platform. This is from a press release on their website. Precision BioSciences announces closing of in vivo gene editing collaboration and license agreement with Eli Lilly and Company. Under the terms of the agreement, Precision will receive an upfront cash payment of 100 million and has received 35 million from Lilly's purchase of newly issued shares of Precision's common stock. Precision is also eligible to receive up to 420 million in potential development and commercialization milestones per product, as well as tiered royalties ranging from the mid-single digits to low teens. Precision will lead preclinical research and IND enabling activities, with Lilly then assuming responsibility for clinical development and commercialization. Lilly will have the right to select up to 3 additional gene targets for this collaboration. Precision can co-fund clinical development of one product in exchange for an increased royalty rate on co-funded product sales. So this, in my opinion, gives this company a certain amount of credibility, in my opinion. Eli Lilly is a big multi-billion-dollar company, and for them to collaborate with Precision BioSciences is a huge stamp of approval. Next, I want to share some highlights from the investor presentation that I found really interesting. So the first one over here we've already talked about, which was the collaboration with Eli Lilly, but I also want to highlight one point over here. The fact that they've initiated a clinical trial with PBCAR20A in relapsed refractory NHL, CLL, and SLL is significant. Refractory non-Hodgkin's lymphoma, or NHL, is a blood cancer which does not respond well to existing cancer treatments. This means such an intervention could be unique in the field of treating refractory blood cancers and potentially curing them. This is huge. I then found an article in Seeking Alpha which shows that interim results from this clinical trial were actually very positive. So now let's take a look at what the analysts are saying. The 7 analysts offering 12-month price forecasts for Precision BioSciences have a median target of 16 with a high estimate of 25 and a low estimate of 7. The median estimate represents a 41% increase. Now let's have a quick look at their balance sheet. As you can see here, Precision BioSciences are currently debt-free, which is great. They also have sufficient cash runway for more than a year based on its current free cash flow. So these are all positive signs. I've actually started a position in this company and I'm very bullish on it long term. It's a small cap company competing in the gene editing space. Sure, it's got tough, stiff competition with the likes of CRISPR, Editas and Intellia. However, the pie is large enough for multiple companies to feed off of, and I think if successful, the potential for growth is huge. People are also now slowly getting to know about this company. I can see that on StockTwits, people are talking more about it and the conversations are now happening. It's only a matter of time, in my opinion, before this stock starts popping off. Now, I could be wrong. This is just my hunch, my opinion, and from the due diligence that I've done. So please make sure you do your own. Let me know what you guys think about this company. Are you going to start a position here, or are you staying away from genome stocks generally? Have an awesome day, and I'll see you in the next one.